So PayPal recently announced their earnings. They top Wall Street estimates. Also, their forecasts also top Wall Street estimates. However, the stock sold off. You have this huge gap and go, and price closed on Tuesday at $77.72. Now, you see these aqua lines here, these blocks. Well, we're going to get into these levels, as this is a line in the sand where either price is going to bounce higher or bounce lower, at least to this 200-day moving average, which is going to serve as dynamic support at $74. So before we drill down onto the lower time frames, let's actually get into news in terms of the results, and then we'll get back to the technicals. So PayPal earnings outlook for 2025 fiscal year beat estimates, while fourth quarter income also topped Wall Street expectations, in a potential sign of progress in the digital payments group's ongoing drive to improve its services. Since taking over the helm of PayPal last year, CEO Alex Chriss has been pushing the business to slash costs and increase spending on automation and AI. It has also been shifting its focus from growing low-margin divisions like its Braintree payments technology service to more lucrative segments such as branded checkout. In a statement, Chriss says PayPal is seeing strong momentum that is setting the business up well for 2025, adding that a major goal for the year will center around scaling adoption. Overall payment volume increased by 6.8% versus the year-ago period to $437.84 billion, while the number of active customer accounts edged up by 1.9% to 434 million. PayPal generates much of the income through transaction fees that it charges both retailers and consumers for processing payments. Now, here's what Mazzullo, an analyst on Wall Street, had to say. Expectations likely ran ahead of themselves, especially after Visa's comments last week regarding strong fourth quarter e-commerce trends. Although we're not concerned, though, and note that PayPal's branded button has been consistently growing in line with its major merchant partners. So this is the monthly chart, your major levels. Congratulations if anyone got long down near this $50 level. You have a monthly buy level and you have a weekly buy level that gave you two opportunities to get long. And if you did get long, you would be up with the pullback, still 50%. However, if you didn't get long and you wanted to get long, now is your opportunity. Let's go to the weekly chart. And what we can see, we have a massive gap down. Now, short term, price has formed this weekly sell level. However, it's in the middle of the range. And so you have to be careful if price is to pull back into that level. Why? Because your extremes are $50 and $100. That's where you have the biggest imbalance between buyers and sellers. In the middle, well, you're going to have a lot of choppiness unless price is trending in one direction. All right. Again, going down to the daily chart, you have the gap down. Prices closed today 13%, or roughly $12. Here's the part we wanted to get to. Let's go down to the 4-hour chart. And here's the level that worked not once, but twice. On a gap higher, taking out the pivot high. But see, the volume wasn't very high. It was actually average, which tells you that there are other confluences that you could have used to gotten in long. You see your moving averages, they're all pointing in one direction from the lower left to the upper right. That was one indication. Again, this gap told you that there was an imbalance between buyers and sellers. And the fact that price took out this pivot high to the left is also another confluence. So the question is this level going to serve as an entry for buyers to get long, or for folks to get long who missed getting long back in November? Only time will tell. Wait 1 to 2 days. Let's see what price action does. Or if you're aggressive, you can get long now. You can scale in. Again, the next level, if this price action closes below, look for price to head down to $74. That would be where the 200-day moving average is currently trading at. Thanks for watching. Subscribe. Please like the video.